Today is January 17th, and we got this notice out of the Senate, the Tax Relief for American Families and Workers Act of 2024. So this is the publication that the Senate put out about the latest tax deal that is ostensibly been agreed upon between the two parties, but has not passed yet. So it's looking like this will pass, and this is what they have so far. So it's probably going to be very similar to this when all is said and done. Now they have about 12 days to get this done in order to kick in for the first filings January 29th. So we'll see how that goes. And there's six parts to it. So part one is tax relief for working families. This is a modification, or the first item is a modification on the calculation of refundable credit on a per child basis. This is for the child tax credit. Depending on the years, rules have changed. We got huge bumps to this during COVID, and then they scaled it back. So now they're saying that the total credit, the provision would adjust the $2,000 value of the child tax credit for inflation in years 24 and 25, rounded down to the nearest hundred. So that implies that for 2023, it's going to remain $2,000. And then 2024, 2025, it'll start increasing as inflation kicks in, which is great because the old credit didn't adjust for inflation, and it was the same credit in 2010 as it was in numbers changed. Now, the refundable portion, so the child tax credit has two parts. There's a non-refundable portion and a refundable portion. And it's probably more than we want to go into right this second, but the refundable portion is limited by the taxpayer's income. And so they're changing the calculations on that. So instead of being 2,500 times 15%, or sorry, instead of being their income above $2,500 times 15%, they're now doing it as income, their earned income in excess of $2,500 by 15%, and then multiply that amount by the number of qualifying children. Now, the child tax credit is good for up to 5 kids. So that could be a lot. And then the overall limit, so there's like a per child limit, and then there's an overall limit on the refundable portion. So under current law, the maximum refundable child tax credit is limited to $1,600 per child for 2023, even if the earned income limitation described above is in excess of this amount. This provision increases the maximum refundable child amount per child to $1,800 in tax year 2023. So that's one of these provisions that's going to affect this tax filing season. $1,900 in 2024 and $2,000 in 2025, along with inflation adjustments described below. And then the rule for determination of earned income for tax years 2024 and 2025, which will be filed in 2025 and 2026. Taxpayers may, at their election, use the earned income from the prior taxable year in calculating their maximum child tax credit if the taxpayer's earned income in the current taxable year was less than the taxpayer's earned income in the prior taxable year. So this is very similar to how the earned income credit is done, where you can elect to use last year's numbers for the calculation purposes, but that'll only apply for next year and the year going forward. So this thing is going to affect a lot of people because a lot of people have kids. And
I have 4.
yes, Serena's got a basketball team.
Yeah.
Oh, wow.
Ram says, wow.
Yes.
So the other parts are not as widely applicable. I'm going to hit a couple highlights here. Deduction for research and experimental procedures. As we know, as we've seen last year, a lot of people got hit by the fact that software development had to be spread out over 5 years on the expense side, even though you got the credit in the current year. And that math didn't work for a lot of people. So what they're saying here is that provision delays the date when taxpayers must begin deducting their domestic research or experimental costs over a 5-year period until taxable years beginning or after December 31st, 2025. Therefore, taxpayers may deduct currently domestic research or experimental costs that are paid or incurred in tax years beginning after December 31st, 2021 and before January 1st, 2026. So that means the people who got caught by this last year can make amendments and they could refile those 5-year amortizations, which is huge. So we have a few clients that applies to for sure. And if they fix this, that means 2023 going forward, we won't have this issue, at least until 2026. Excess extension of allowance of depreciation, amortization, or depletion, and determining limitation on business interest. This affects only large taxpayers, so over 25 million, so not our clients so much. Extension of 100% bonus depreciation. Starting in 2023, we were starting into the phase out of the bonus depreciation, going from 100% to 80 to 60. And now they're saying under this proposal, qualified property placed between 2017 and January 1st, 2023 as well as specified plants planted, grafted, blah, blah, blah. Same dates are eligible for 100%, and then it gets phased down 20% per calendar year. Provision extends the 100% bonus depreciation for qualified property placed in service after January 31st, 2022, meaning starting in 2023, and January 1st, 2026. And so the provision retains 20% bonus depreciation for property placed in service after December 31st, 2025 and before 2027. So basically, they're pushing out the 20% breaks on the bonus depreciation out to 2026. That is also a big swing for a lot of businesses, which I'm very happy to see this particular provision. And
That helps us.
yeah, that helps us. It's definitely for sure. Increase on section 179, going from basically the raising the limits on 179. It doesn't affect our clientele so much, and it's a marginal thing going from 1 to 1.3 million. Okay. Part 3, there's a bunch of stuff with people who are dual citizens with the United States and Taiwan. Doesn't really apply to that many people. I'm going to skip over that. Okay, part 4, assistance for disaster impacted communities. There are three things here. So one is some people got specified payments if they were in like the wildfires, like the ones in Maui, and the train derailment in Ohio. So they're specifying here that those payments are going to be tax free, which is great, and I think they should be. More generally, they're saying that under itemized deductions, we have casualty losses. So there was part of the Tax Cut and Jobs Act change was that casualty losses only applied to federally declared disaster areas. So it couldn't just be, oh, a pipe broke in my house and my basement flooded. It had to be part of a hurricane or something like that, which is still the rule, but they are changing the math on it. So it used to be the damage had to exceed 10% of your adjusted gross income. And now they're saying that the losses have to exceed $500. So that's a much lower bar, and you'll get a lot more deduction out of that. So great. And it's going to apply starting in January 2020. So if you had disasters going back that far, then you can possibly do amendments. And ending 60 days after the enactment of the proposal if the incident period of the disaster, as specified by FEMA, as the period during which the disaster occurred, begins on or after December 28, 2019, and on or before the date of enactment of this proposal. So it's a weird carve out that they're doing here. So if today's January 17th, 2024, let's just say it gets passed today, this will only apply to disasters between January 1st, 2020 and January 17th, 2024. And then presumably after that, then it goes back to the 10% rule. So a weird thing. Part 5, affordable housing credits. So if people are in affordable housing getting tax credits, then there's some changes in the rules going from 9% to 12.5%. Okay, great. If you're financing your project with bonds, then there's some special language there. Doesn't really apply to many of our people. And then part 6 is the tax administration and eliminating fraud. So two major things here. So one is the 1099 NEC and 1099 miscellaneous reporting requirements. They're raising that from $600 to $1,000. And that's going to start in 2024. So for 2023, you still got to send them a 1099 if it's between 600 and 1,000. For 2024 going forward, it's going to be 1,000 and up. And it's going to adjust for inflation, which will be people will have trouble tracking. But yeah, so it's going from a flat 600 to a flat 1,000 to that 1,000 plus inflation. ERTCs, employee retention tax credits. There's increased penalties if you're submitting fraudulent stuff. So don't do that. And part of the deal here was that they are going to stop accepting new employee retention credits. So let's see. I gotta find the right part here.
So all the ones that are already there, they're going to process, but nothing new, right?
So they halted processing on the ones back in September or whatever it was. They are not saying that they're going to resume. They're talking about promoters, statute of limitations. They're extending to 6 years so that they have more time to audit people.
Oh yeah, 6 years.
Yeah. So under current law, taxpayers can claim COVID-related ERTC until April 15th, 2025. This section bars additional claims after January 31st, 2024. So there's just going to say no more, basically.
Okay.
If this passes. Whoever has already submitted, then that's it. And yeah, so those are the 6 sections, about half of which applies to our usual kind of clientele. and we will keep an eye on this and as it goes through the thing. The one thing I'm most concerned about is that these changes, they require redoing the tax forms. And so the forms process, the IRS comes up with a draft. It then has to be implemented by the various software companies. Then the IRS has to approve the software companies' implementations. So it's not a 1, 2, 3 thing. There's a lot of back and forth here. So the sooner the IRS can get to work on that, the sooner we can actually get these filings done in the newly correct way. So hopefully that doesn't delay things too much, but it is a possibility. So that's where we are as of January 17th, and I guess we'll keep our people updated as we get